Most people are stuck in a financial system designed to trade time for cash until failure. In this video, we are breaking down the structural physics of wealth architecture. We'll analyze the linear income trap, dismantle tax and inflation leaks, and build the blueprint for zero marginal cost engines that scale infinitely. Welcome back to the system. Most people believe that building wealth is a direct function of labor inputs and sustained physical effort. They approach their careers through a simple linear equation: trade energy and bandwidth for proportional financial compensation. Mathematically speaking, this creates a strict O(n) linear dependency on your time. In software engineering, if a primary database query scales linearly with user load without caching or distribution layers, the entire system eventually halts under moderate traffic. Your career operates under the exact same system constraint. Your active labor capacity is hard capped at 24 hours per day, and realistically, far less when accounting for cognitive load and physical recovery. Because time is a non-renewable, strictly limited input, any financial system that relies on your continuous physical execution contains a permanent, single point of failure. If you stop executing daily tasks due to burnout, market shifts, structural changes, or personal health issues, the entire cash flow pipeline collapses to zero immediately. Working harder inside a linear loop isn't a long-term strategy. It's a structural operational bottleneck. The traditional linear income model isn't just mathematically capped. It is engineered with severe internal friction and capital leaks. When you generate income purely through active labor, whether as a corporate professional or a direct service provider, your capital is subject to the highest marginal tax bracket directly at the point of origin. You are taxed on gross revenue before you ever touch a single dollar to invest in assets or scale your operations. Meanwhile, corporate structures operate on an inverted financial loop. Top-line revenue is deployed into capital assets, operations, and reinvestment channels first, and taxes are applied only to net remaining operational profit. Combine this immediate tax friction with a continuous M2 monetary expansion rate, and uninvested baseline capital suffers compound degradation month after month. If your financial yield on active labor does not outpace marginal tax friction plus real monetary debasement, you are running an operational system with a negative net real return. Simply working harder inside this structural setup accelerates your overall capital depreciation. To exit the linear labor trap, you must completely decouple value creation from personal execution by introducing asymmetry. In linear systems, doubling your output requires doubling your physical or mental effort. In asymmetric systems, the marginal cost of reproducing your output drops to near zero after the initial architectural build. Think of software binaries, automated email pipelines, digital products, or media infrastructures. Once the initial infrastructure is engineered and deployed, serving 10,000 users requires virtually the exact same baseline overhead as serving 10. Your strategic objective is not to sell your energy at a slightly higher hourly rate. The traditional linear income model isn't just mathematically capped. It is engineered with severe internal friction and capital leaks. When you generate income purely through active labor, whether as a corporate professional or a direct service provider, your capital is subject to the highest marginal tax bracket directly at the point of origin. You are taxed on gross revenue before you ever touch a single dollar to invest in assets or scale your operations. Meanwhile, corporate structures operate on an inverted financial loop. Top-line revenue is deployed into capital assets, operations, and reinvestment channels first, and taxes are applied only to net remaining operational profit. Combine this immediate tax friction with a continuous M2 monetary expansion rate, and uninvested baseline capital suffers compound degradation month after month. If your financial yield on active labor does not outpace marginal tax friction plus real monetary debasement, you are running an operational system with a negative net real return. Simply working harder inside this structural setup accelerates your overall capital depreciation. To exit the linear labor trap, you must completely decouple value creation from personal execution by introducing asymmetry. In linear systems, doubling your output requires doubling your physical or mental effort. In asymmetric systems, the marginal cost of reproducing your output drops to near zero after the initial architectural build. Think of software binaries, automated email pipelines, digital products, or media infrastructures. Once the initial infrastructure is engineered and deployed, serving 10,000 users requires virtually the exact same baseline overhead as serving 10. Your strategic objective is not to sell your energy at a slightly higher hourly rate. Your objective is to systematically convert active physical energy into decoupled, scalable digital architecture. This is the core operating principle behind Engine 1, the operational engine. We stop selling raw human bandwidth and start building system infrastructure that processes incoming transactions asynchronously, regardless of your personal calendar. Here is the full structural blueprint for building an automated operational engine. Instead of manually managing client life cycles, fulfilling physical orders, or trading hours for dollars, we construct a zero-touch digital flywheel. First, customer acquisition. We ingest traffic through automated media and distribution channels, such as targeted evergreen technical content, routing incoming traffic directly into automated nurture sequences hosted on infrastructure platforms like ConvertKit or Beehive. Second, conversion and clearing. The prospect purchases a high-margin digital asset, productized workflow, or specialized software tool. The transaction is cleared instantly through the Strike API, triggering an event-driven payment webhook. Third, middleware orchestration. An automated integration engine like Make.com or Zapier receives the JSON payload, instantly validating the event signature. It executes two parallel workflows without human intervention. First, it issues secure access tokens via AWS S3 or Circle to deliver the product access immediately to the user. Now that Engine 1 is generating consistent, nonlinear cash flow, we must systematically solve the liquidity capital leak. Most founders and high-earning professionals allow excess cash to sit idle in a primary business account, where it gets consumed by lifestyle creep, operational inefficiencies, or baseline inflation. That's the best way to kill Engine 2 and miss compound interest wonders. Engine 2 takes surplus liquidity generated by Engine 1 and constructs an autonomous compounding machine designed for permanent asset accumulation. The capital entering Engine 2 is deployed according to a strictly defined asset allocation matrix. The primary core layer, typically 70 to 80% of incoming liquidity, is routed automatically through scheduled ACH transfers into low-cost broad market index vehicles such as Total Market Funds VTI and VXUS. We enforce dividend reinvestment programs across all accounts so that every cash yield dividend generated by these underlying assets automatically purchases additional fractional shares without manual execution. To protect the overall portfolio against systemic market volatility and unwanted exposure, we institute a programmatic threshold rebalancing rule. If market movements cause any specific asset class to drift more than 5% away from its strategic target allocation, the system triggers automated rebalancing trades to bring the risk matrix back to base. Your long-term wealth growth is no longer tethered to your daily energy levels. It is governed entirely by automated, compounding market mechanics. When you step back and look at the entire landscape, this is the complete macro architecture of total financial autonomy. The dual-engine system. Engine 1 acts as your high-margin operational cash flow generator. It functions as an asynchronous digital asset with near-zero marginal cost of replication, completely protecting your personal time while scaling top-line revenue. Engine 2 acts as your capital preservation, risk management, and compounding vault. It takes the excess liquidity systematically extracted from Engine 1 and transforms volatile operational revenue into permanent, yield-generating asset bases. Over time, a critical mathematical threshold is crossed. The passive compounding yield, generated by Engine 2, officially surpasses the total operational overhead of your life. At this exact intersection, you have permanently decoupled time from money. A system becomes completely self-sustaining, resilient against market shifts, and mathematically proven to compound over decades. Stop attempting to solve an architectural system flaw with extra hours of linear labor. Working harder inside a fundamentally broken structure only leads to accelerated system fatigue and diminished returns. Your immediate execution roadmap consists of 3 specific engineering upgrades. First, perform a complete single point of failure audit on your existing income sources. Identify every single step where your direct personal time acts as the primary choke point for operational throughput. Second, engineer the basic infrastructure of Engine 1. Package your specialized domain knowledge or technical expertise into a productized digital asset connected to automated payment webhooks and instant access delivery pipelines. Third, implement your Engine 2 capital routing rules. Set your fixed working capital threshold, automate your tax reserves, and route all remaining surplus cash directly into automated index compounding. Stop acting as the engine inside your business. Start acting as the architect of your entire system. If this architectural breakdown provided a net positive signal to your engineering mindset, initialize the feedback loop by liking this video and subscribing to the channel. Executing these actions trains the algorithmic distribution pipeline to route high-signal systems content directly to your feed while filtering out low-leverage lifestyle noise.